So we are actually working day and night to make sure that we fix that situation. I mean, some of the gains or some of the starting points that we've been working on is to make sure that we grow our top line and we are profitable. It starts a very good conversation around some of the restructures we are doing in our balance sheet. We've made tremendous progress. While we are very excited internally about the gains we made, there are procedures and standards to reporting. So we expect this to start now being reported in the next reporting period. But you see a lot of legacy issues fall out of our balance sheet, and we start to fix that. Plus now the profitability, recapitalizing our business through retained earnings should improve our balance sheet as well. Okay. Yeah.
I'm just recollecting my memory, and I remember, I think it was sometime last year when you had a rights issue. And now definitely with this kind of results, what does this speak to your investors? Are you projecting positive and moving on even a positive return?
Right. Yeah. So we are happy about the positive multiples, and we've been talking about the improvement that you're seeing in the business, and expecting that to come through in our income statement. Now that is coming through, and we are projecting improved business performance going forward. Okay. We expect this to continue the positive vibe out there, and assure all our stakeholders to give more support.
Okay, excellent. Yeah. So looking at your subsidiaries, I think we have spoken about East Africa Cables, a bit on Tanelec, and then we have AEA. And I wanted to ask you about AEA. You reported a 37% revenue increase in this subsidiary, so despite the capital constraints. So what are the lessons from AEA on resilience can be replicated across your group that you're seeing?
Right. And resilience is a key word there. I mean, it's really about building businesses that are able to pivot whenever there are challenges, and building businesses that have that operational discipline and excellence. Having a cost base that you can manage and be able to work off of it so that the top line, as you grow your top line, you're actually delivering a bottom line for the stakeholders. So it's really about building businesses that are resilient.
Okay. Yeah. For the sake of the viewers, please let them know what AEA is.
AEA is used to be called Avery East Africa. It's a business that does construction of infrastructure, also supplies specialized infrastructure products for management of infrastructure, just longevity and efficient use.
Okay. Yeah. Excellent. Thank you so much for that. Yeah. I want to move on to your capital structure and future plans as we come nearing the end of this conversation. So you have mentioned about your continuous focus on capital structure optimizations, even on your presser as well. So are we likely to see restructuring, equity injection, or divestiture in the near term?
Right. Yeah. So we'll continue to focus on restructures. We've got some legacy impacts in our balance sheet that we probably should not be there. But our goal here is to have a strong balance sheet and a capital structure that works for us. Okay. You're going to see us look at our debt structure from the tenors to the repayment structure, such that we are matching with the assets we finance, and we are able to get a bit more capital towards production. So that's something that will continue to happen within our business.
Okay. Yeah. Njiinu, anytime we hear profits, shareholders are like dividends.
Yes.
I want you to address it because I didn't hear you make an announcement on it.
Right. Yes. So we want this to be as soon as possible, but what we have to do is that we have to recapitalize our business. The best way, the most sustainable way is through retained earnings. We also need to build our reserves. It's a requirement that you pay dividends from reserves. So we are looking into that. We are working very hard on that, and also what we would want to see, what we are hoping to see, is improvement of value of the shares in the stock market, which somewhat increases or improves the valuation for our shareholders as we work in the short term as we work on the dividends. Okay. And we've seen our share price respond positively in the last one.
It's done very well.
Yeah, year to date. So we're happy about that as well.
Yeah. So at least there's some hope in the near term.
There's some value coming through.
Value coming through.
Yes, at least.
Yeah. Quite optimistic there. Yeah. And as we come to a close, let's talk about your outlook and risk. So you mentioned definitely in the conversation about your divestiture from non-core assets, even on your press, you also talked about divesting from your non-core assets. I wanted you to highlight what are this and how much do you hope to unlock from them?
Right.
Yeah.
Yeah. So one key thing for us is that we keep looking at our assets, the return on those assets, and what value they bring through. So I know we have announced divestiture from East African Cables Tanzania. That's been in the news.
Yes.
We are constantly looking at any assets that we can monetize to either reduce debt or to increase our working capital so that we can increase production. I mean, the opportunity out there is massive. What we need is to put working capital to work, give us a top line, and ensure that we are reducing our cost of debt so that we can have a good bottom line.
Okay. Yeah. So what's your biggest risk that you're now looking at in 2025 as you look at growth at TransCentury now?
Yeah, whenever we do a scenario analysis, and we do this quite a bit, we always looking at, of course, the availability and cost of funds. On the other end, infrastructure is impacted by government policy as well. The good thing is that how our business is built is aligned with the regional infrastructure plans. Of course, macros are important. From currency movement to interest rates, and so we are looking at our business and our practices and how we finance our business to make sure that the impact is. Or at least we hedge operationally one way or the other to make sure that it's not a major impact to our business.
Okay.
Yeah.
I must ask you this, and I know I didn't prepare you for it, because anytime businesses are operating in the region, there's always regional dynamics. It's interesting that you have such a successful brand and growth in one of the countries that is referred to a bit differently to Kenyan businesses. I wanted to ask you, you seem to have cracked it, and there's so many businesses that would want to learn from you. One of the key questions then would be to any business person looking at you, and what would be your key advice to them when you're thinking about expansion in the region, because you have a regional perspective as group head?
Right, yes. Yeah. So I think for us, one key thing is stakeholder management.
Okay.
I mean, you have to actively manage stakeholders and align in terms of, for example, in infrastructure, it's critical, it's core. The government has to invest in infrastructure for the economies to grow, and where they don't, as the population grows, consumerism and the like, private sector would demand infrastructure. So it's core to how an economy operates, and then you manage our stakeholders very closely. And I think as long as you're aligned, you're delivering, you can anticipate any issues and resolve them.
Absolutely.
Yes.
Finally, you have to talk to your shareholders. They're here, they're watching. They're happy that they're back to profitability. But what's your word to them in terms of the future outlook and a return for the investment?
Right.
Yeah.
Yeah, I mean, suddenly we feel very good about the future of this business.
Yeah.
We invested in the right sectors. I mean, and this is shining through every day.
Yeah.
As we fix some of the legacy issues, you can see the leaps we are able to make. We are working on fixing what was a challenge, which was our balance sheet and the debt situation. And we believe once we do that, we go back to the market where we are able to raise funds for normal operations in a normal manner. We can be able to utilize our capacity headroom, because the capacity utilization across the group is quite low. So we actually do not need to invest to be able to grow the business substantially.
Yeah.
And ourselves, we are quite excited. And I think the results are starting to show.
Wow.
Yeah.
Nganga Njiinu, thank you so much for your time.
Thank you. And happy to be here.
There you go.
All right. Thank you so much.
That's Nganga Njiinu, the Group CEO, TransCentury, very optimistic that they have now returned to profitability, and that's the trajectory. They're not going back, which is very good news for you, the investors and people who look up to the success of this particular company. Thank you so much for your time. I leave you now with the markets.